Hello everyone, welcome to the PivotBoss monthly market outlook for August 2022. Thank you very much for joining me here today. This is our first monthly market outlook in 2 months. We did not do one in July. The last time we did one was the June monthly outlook, and it's been quite a difference in market sentiment since then. So we'll kind of review some of the charts and some of the ideas we talked about before, and also look at what's headed likely next. And then we'll also take a look at quite a bit of candidates as well. I got different types of signals, different types of setups, different types of time frames for ideas. There's going to be a mix of everything, and as always, if you have any candidates you'd like me to take a look at, please let me know in the chat box, in the trading room, or in the Zoom chat box. Either one of those. I'll be keeping an eye on both of those as we go along. Again, thank you very much for joining me. If this is your first time to the PivotBoss Monthly Market Outlook, my name is Frank Ochoa. I am the author of the book Secrets of a Pivot Boss. You can find me at pivotboss.com and also in the trading room at pivotboss.ecofin.com. So again, let's take a look here at the market as it has been over the last couple of months. You know, we can start with the ES for a quick moment here as I bring up the daily time frame off to the left side of the screen. Let's bring it back. Here we go. One of the things that was interesting about this one last time, and I'll change these pivots here. These are the PivotBoss pivots. I'll change these to yearly. And one of the things we mentioned, and again, we did not do a July monthly outlook. Instead, we did an outlook. Oh, let's change this back here again. Let's see. Yeah, there we go. We didn't do a July monthly outlook. We did it in June. And let's do this real quickly. Let's go over here and change the template back to its original. There. And there we go. Okay. One of the things that was interesting was early last month, or in June rather, we had that big rally at the end of May. These were the last 2 trading days of May. And then we had that narrow range of price action that happened to begin the month of June. It happened again after a bounce and in a downtrend. We mentioned before that this blue line is likely next. This is the last major line that the market really needs to go get according to last year's range, right? This is the PivotBoss pivots, and the way I do the pivots is you have the previous high, the previous low, the previous close, and the previous midpoint are the most important pivots on the chart. You also have the pivot point and the top of the pivot range here, and then you have the extensions that go outward. One of the things we mentioned to begin the year, actually in the final week of last year, was given the strength that we've seen this year, we should be looking for a rejection at the previous year's high and close, which would bring us into this midpoint for the year. At that point, we could see a reaction, but if it fails there, some point down the line, it opens up the lower half of last year's range. So at the beginning of June, we were still looking for price to drop into that zone. We noted that, you know, this could happen again after bouncing off the May FOMC key level. We got that target. So briefly this year, we were an outside year down. Very, very briefly on 2 days. Outside year down. Since then, look at the bounce that we've had. And this is what we've been, I don't want to say struggling with or grappling with. We're just kind of discussing when do we switch, you know, to a short-term uptrend and make it a medium-term uptrend. Is this something that we can trust moving forward? Or are we about to see another trap similar to here, or similar to here, or similar to here that leads to new lows ahead? Are we about to see another trap that leads us back to new lows and a big retest of the previous year's low and the current year's low. So one of the things we mentioned before was once we get that, we could begin to see a rejection. One of the things that's been very interesting, if you switch this back here and make this quarterly, we bring it back this way. At the beginning of July here, we've seen a tremendous bullish reaction to the market. We've had all of this downtrend, but to begin the new quarter, so the first 2 quarters of the year are done, the new quarterly pivots are out for Q3, and we saw an initial rejection of the previous quarter's close. We didn't even see a test of the low. We got a secondary retest here, and that thing led to the previous quarter's high price, or midpoint rather. That was what we expected in July. Based off of this initial rejection we saw this week, we said, okay, well, this opens up that target. That's all very short term, right? But now, do we get a continuation? Does the market stack 2 months back to back on each other? Do we get the pullback into the pivot range here, the higher value relationship, and does that lead to more strength up ahead? Or do we just see another trap and reverse back down? So right now we can definitely see it's kind of a tale of a couple of different markets. Some things rallying tremendously over the last 5 weeks, like the ES, the NQ, YM, RTY, all doing quite well. You have others, markets that are just getting crushed right now. You have crude oil, for example, that's had a massive crash since we last saw it from a monthly market outlook perspective. And then you have things like gold, which had crushed all the way down until it hit its significant 3-year area of support at 1680, and now we're seeing a bullish bounce. So again, we have different markets going in different ways here. This market right now is this is one thing we mentioned in the trading room a little bit earlier today. If you just draw a line from the beginning of July here and go this way, right, and just take the market as what it is from that line to the right, this is a very healthy bullish market right now. Very, very bullish from a short-term perspective. We've seen bullish attempts here. We've seen bullish rejections. We've seen higher highs, higher lows. We've seen a continuation. We've seen multiple weeks of check mark trend week structures, and we're starting a third, or at least another one here. That's all very, very strong. But when you have the history of what's happened here all year prior to that, and even some of the year prior to that, we know that we may not be fully done just yet with the downside price action, although the FOMC key level that came out last week printed higher than the one before it. The one before it was the 6/15, that's the June 15th. This is the July 27th, and it printed higher, and so far that's been defended, and then this one taken bid. So after the Fed has hiked rates 75 basis points multiple times here, most aggressive cycle we've seen, this thing is now rallying on those news events. So it's a bit of a different sentiment change here that we've seen. From a short-term perspective, we're starting to get buy signals that are trend confirmed signals instead of just a whole load of sell signals. That's pretty good. We'll be looking at mostly buy signals here from a short-term perspective, and we also have some candidates that could be going down as well. So right now, the ES has done well off of our initial framework for what we were looking for the first half of the year so far, rejecting prior year highs, dropping to previous year mids, dropping into previous year lows, is done quite well. Now we're seeing the PivotBoss pivots from a quarterly perspective be very important. This is going to be the key level right there. That's the previous quarter's midpoint. If price can find acceptance above that, we start working higher, perhaps as high as the high. Maybe not very likely though, right? One of the things that we look at in our trading room is market structure. So when you look at market structure in the ES here, you'll notice, some market structure like this. Then you have prior support here, and one of the things that we're testing right now is prior support. We had support here, 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 and then it broke and dropped, and it came back, and it failed there and dropped, and now it's back. If it cannot find acceptance above that zone there, we drop back. Maybe not all the way back down. Maybe we just drop here to about 3,900, and it kind of bisects this lower range here. But if it cannot find acceptance above these levels, you rotate back in the range some bit. If you can find acceptance, it takes a tremendous day to really push the envelope to the upside. And then from there, you have now reestablished back within this market structure and can move higher within the range. But like we saw last time, it tried and failed bad. We saw the time before that right here. It tried and failed bad. So here we are again on a third try. What's going to happen this time? So again, from a short-term perspective, very strong, but we're intersecting at higher time frame levels of market structure that could be very interesting moving forward. If we take a look at the NQ, this one has had arguably the most strength recently. This one led the effort to the upside today. Stop run day up, breakout from the 3-day narrow range. Very, very strong stuff. If you look at the 8-period average, look how bullish everything is right now. It's trending up. The first retest into the crossover range is bought, and we've seen a tremendous move. As a matter of fact, last week in the trading room, as this signal was developing, I mentioned that moment that this is the first time we're getting this signal almost all year, because it is a bullish trend confirmed signal, and you have to be in an up move. And this market hasn't really been in an up move. Instead, we've seen lots of sell signals along the way. And so I mentioned that the way that this is all stacking up, this could be our first good one here. And 1 to 5 days higher could be ahead. And here we are after this one printed. 1, 2, 3, 4, 5 days higher we go. We're now starting to see some pullback and some additional signals now come into play. We'll see that in some stocks here. And again, the next pullback could still continue this thing higher. You can see how this has had a rounded type of bottom here. Those rounded bottoms can tend to be very, very bullish. And if you're not going to get an outright super strong rejection on the low, then you do it in a rounded, gradual way that builds some energy, accumulates, and then you start to see perhaps an upward expansion and markup phase. So this is what's happening right now. It looks really strong. It looks really good. It looks the part. It looks the part. When you look at the market structure right here, and you look at the market structure back here, it also looked the part during this rally right there. And then we're closing above those highs, just as we are right now. And then look what happened afterwards. It happened back here, where price was closing well above these highs right here, above these short-term highs, and then look at what happened next. So I understand that we have seen traps throughout the year so far, and mostly we have known that those were likely traps because the market was moving lower, lots of different pressures on the market. Well, now, 8 months developing later, and things have changed a little bit. Rounded bottom, good energy, and attempting market structure, but at the same time, still got to pay attention to any kind of day that looks like this or any kind of failure back into the range. One of these types of plays, one of those types of plays. A failed new high tomorrow with a deep drop back below 13K. Oh man, it will look very similar to many of the 2-day combos that we've seen before. The difference though between now and what we've seen prior is that this move has been very mature, very developed, very good bullish structure, higher lows, higher highs, recovering market structure. Here's a good key range on the low. It broke through the top, held the top, and is now working toward the 100% expansion target. So, this is a little different in how strong things have been. But just in case, if this thing crushes tomorrow and we're back below 13K, it will have some very, very clear ties to what we've seen throughout the year so far on after rallies. Not anticipating that to be the case right now, but that it surely could happen, especially with earnings on tap for many big stocks. But so far, this is looking fairly solid. Look what we have is here as well, higher value relationship month over month. Any pullback into that zone could provide a buying opportunity for continuation up. So not bad as the NQ continues to lead higher. One of the ones that we're talking about in terms of market structure is the Russell. The Russell has been phenomenal with regards to market structure over the last 2+ years. And it all stemmed back from this impulsive move from that low. You got a strong rally to this high, and that gave us a new key range. It gave us almost an entire year of fade opportunities, and then when it got up here and started to form this failed high, we knew that if we fail at 2366, we could see a push back to the bottom of the range. So we were early on that. It happened. It was great against that range. And then to begin the year, we broke through the bottom of it. When it came back right here, a trap and new low. When it came back again, look at this day right there. You know, after the strength, you know, you see a day like that. And then the very next day, a hard turnaround. And it went not only to the recent low, but broke to new market structure below. And then you look at, you know, these series of lows and how price got above there, and that was a huge trap recently. Boom. And now here we are again, back to the scene of the crime, almost identically, trading the same type of day, back to back here. Do we get a hard rejection tomorrow and start the thing again? You know, after so many months, again, since this strong high in November, it's been downhill. And when you look at the upper trend line, when you look at the current trend, everything mostly suggests down until proven otherwise, and you're kind of at that major crossroads in the chart again. Does it break through now and open up all of this price action from 1900 to 2100, or do we fail again and make another move down? So again, not the easiest to kind of guess what's going to happen there. This has been, though, admittedly, one of the better moves we've seen all year long. Maybe even if we do fail back, perhaps we start to build some higher lows, higher market structure, inverted head and shoulder, and that can lead to a breakthrough. So maybe all's not lost if we do fade back tomorrow hard, because we may be able to pick it up and still keep it moving higher. So this is getting interesting. But clearly, when we've gotten to these points in the past, we've seen tremendous failure after those big days up at these major inflection points in the chart. And we'd be remiss not to have that in mind tomorrow. So how does the market respond tomorrow? If we can continue to see buying opportunities after morning weakness, things could get very nice. So RTY is a big one to watch with regards to market structure. Another one here is crude oil. Let's take a look at crude oil right now. Crude oil has been relentless to the downside. Now this is one we did miss in June, at least for the monthly outlook. We had this one rallying from the lows up to the 115. And then once this happened and price started to push through here initially, we had the June idea that we were likely going to continue to a 125 to 130. So it missed it. That was the idea up until this day right here. We still had higher highs, higher lows, failed new low, and then that right there changed everything. We have the recording live in our trading room when that actually happened, where as soon as that rejection occurred, we saw it across all time frames, the higher high fade, massive 60-minute rejection, and we knew it could turn into quite the day, likely an outside day. It did momentarily, and then it wasn't able to hold that edge. So this narrow range with a failed high unleashed a huge rotation down, and ever since then, this market has been bit by failed new highs, by narrow ranges and dumps, failed new highs and down. Today was a failed new high and an outside day down and a tremendous continuation. So this has been a very bearish market since right around the middle part of June. So this day right here, if you want to mark the exact day where things turned, that's right at the middle of June. Up until that point, this thing was very strong. We were seeing bullish, failed new lows, bullish, failed new lows, narrow ranges breaking to the upside, failed new low, continuation, failed new low, continuation. Here we are again, and on right there we failed. So while the market from the beginning of the year overall has been very bullish, we are now giving back a lot of that at the moment. And if you look at this 93 level, which is this this blue line, you bring it back, you're basically retrading now the first 2 months of the year. Because once we hit the end of the month here, this thing exploded to the upside on that Ukraine invasion. We are now potentially working our way down and retrading back through that portion of the range. That's incredible to think about. If you want to just look at the volume profile, we can go for the year. We can make this year here and go year to date and click OK, and that'll give us the year to date profile. This is the year to date profile for crude oil, and one thing I find interesting again is this rejection up here that started the down drop was above value, this value high. It breaks down through it here, retests that line and drops. Let's accept that risk real quick. You see this thing drop down to value, and then it chop around value until this failed new high, and now we're driving down again, breaking through support in the process, which is held again since the first 2 months of the year, took it up to that level. So this is the potential to drop quite a bit more through this beautiful D-shaped profile, likely through the VAL here. So that's your VAL, right? You drop not just the VAL and bounce, you usually drop through it some degree, right? And then you get this little slice of the pizza pie here, and then you snap it back maybe. But right now we are driving down. We have taken VPOC offered. We have taken year-to-date VWAP offered. So that's year-to-date VWAP right there and has been offered. Again, in a downtrend, failed new high, failed new high, failed new high, failed new high. Today even, failed new high, and this thing is just getting crushed. So here's the deal. This one could be headed quite a bit lower. We have some very doable downside targets that we're looking at in the trading room, and we have a good idea for short-term directional price action over the next week. Here's the idea for this. Number one, the downside targets we're looking at here, if price remains below 93, which is this blue line, that means, price could pull back early tomorrow and start to form a lower high, and then you drop for the day. We're looking for a range tomorrow of about 4.5 to 5 points of range. Somewhere 4.5 points would be a very good doable amount of range. So if the morning rally comes in, or morning strength is hit with weakness, and you see a strong morning top, from that top subtract $4.50, and you're going to get yourself a very doable downside target for the day. Secondly, so that's your day trade idea. Any morning strength tomorrow, pre-market, early after the RTH open, and a strong top. From that top, subtract 4.5 points, you get your target. That means if we go up to 92.5 tomorrow, which is 2-day lows that it broke down, sell 92.5, buy 88 rather, and that's a great move for one day. From a swing basis meaning holding more than one day, as I do it, and usually 5 days. So 1 to 5 days. Maybe you go a couple of weeks out or more, depending on the idea. But from right now, you pull back and this thing drops tomorrow, there's a likelihood of continuing downward to this target right here, and it's 85. 85 is the quarterly 25% expansion target. So the S25, and it's from a quarterly basis. And then from the monthly perspective, it is also the S25. So it's the monthly and quarterly S25 target. That's a great level right there. Great level of consensus by 2 different time frames. You got multiple algorithms and programs that are all going to be looking for that line. So a pullback, you drop likely into 85s. That's the thought right there. There's also the FOMC key level. That's the 87.22s from January. That's a naked level that likely needs to get tested. So that's a very quick target. And then you have the lower end of the range here from a market structure perspective, where you go down to 80.82, another FOMC key level, and then you wipe out the year's gains back to 74.5. That would be, again, that'd be something to see the whole thing play out. It wouldn't likely be all in one swift go, but it could be something that plays out, say, over 6 weeks, right? That if it were to continue that way, what we need to see is some significant rejection that's going to turn this thing back up. In terms of now this is where a massive rejection and rally can happen tomorrow. And this is where we talk about this in the room. When you have a major close after a heavy day of selling pressure, and that close is the lowest close you've seen in months, the next day, if you come up here at the RTH Open and we're gapping up above the midpoint, like USO is gapping up because the futures have rallied so much, that could be a massive trap and you rally right back to recent resistance. I'm not expecting that to happen, but again, that would be one way where you get a massive rotation back up on trapping late bull bears. So right now, the expectation, sell the pullback to 92.5, pick up 88s or more. On a 5-day basis, you're looking for a move that can take you to 85 or perhaps as low as 80, 82. That's the idea right there. And at some point, you may see another rejection, and then you start your counter phase back up, and then we'll see what happens here, and maybe we're dropping back down. So something like that could play out, but very bearish right now for crude oil and oil-related stocks. A ton of oil-related stocks right now showing weakness throughout the day, whether it was refiners, oil services, you had majors, they were all down. You could pick a stock, sell morning strength for late day weakness, and look for a 1 to 5 day continuation out of oil-related stocks and crude oil. So that's the idea as we head into the next week of trading. Now, I know we're talking heavy futures here, but futures have been very, very interesting lately, and they've been, we haven't talked about them in 2 months in this forum. This is gold. Gold is, and I should likely, let's do our regular 5-year profile. There we go. A couple of things with gold. Number one, you'll notice regression channel since these highs, and it's been right on, and we're right near the top. After a bullish bounce, 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 sold, sold, sold. Do we get sold again? So that's number one, is we may be looking at a short-term rotation down. But for the first time in a while, gold and gold-related stocks have been crushed. You look at Newmont or GOLD or GLD or GDX. I mean, a lot of these gold stocks, gold ETFs, the whole thing has been really destroyed. We can look at some groups as well. The gold industry group as a composite. Let me just peek this over. This is Visual Trader jumping over right now. But just as a composite, the gold group right now since April has looked like this. And really aggressively bearish. And then today, or yesterday, you're seeing a rejection here of the recent highs with likely continuation. So a tough hit group here. You know, a lot of weakness across multiple types of stocks and multiple types of ETFs, and we could see more downside. You know, GOLD, Newmont, all these could be easily dropping. AU could be dropping here ahead just from a short-term perspective. Just focusing on gold itself, this is something we've talked about in the room as well. This right here, this low, from a major market perspective, is finally one of the strongest lows that we've seen in the market. That was a phenomenal low. We haven't seen many strong lows at all. We're still waiting in the ES or in the NQ. I know they've rotated off the lows, but they weren't strong lows. This was a very strong low, great bounce. Right? This was a strong low, a great bounce. Obviously, this one's been smacked down after rallies, and maybe we're about to see that again. But a very strong low, and it honored significant market structure. If you go back over the last 3 years, that 1680 market structure level is phenomenal. Look at that right there. 1680, 1680, 1680. 3 times last year. This one was the flash crash, that little mini flash crash that hit gold, and the low, 1680. This time, again, we hit 1680, 78.40 to be exact, and look at the reaction. This year has been so bearish on so many different markets, and we've seen all of the bear tactics come into play. Failed new highs, you know, rejections at market structure levels, broken market structure, all these things. We haven't seen many bullish reactions. We finally saw one here at 1680. It was a great bounce so far. The bounce took us right to our target in the room, which was 1800 right there, because again, it was prior support here, prior support market structure. So if you fail at market structure and you see a rejection, you bounce back to it. Naturally, there could be some profit taking or some outright selling there. Great bookend rejection. So when you get a strong rejection like this and it leads to a major rally, it goes up until it can't go anymore, and then you get an equally significant rejection just like you did to start the thing. That's what I call an impulse move. That impulse move tends to see a snap back to the midpoint of that range. And if that's the case, we get ourselves a new key range to work with, and that new key range could be useful for the rest of the year. So I'm rooting for 1741.70 to be hit so that we get ourselves a new key range that can be useful to trading gold moving forward. As a matter of fact, when we had the initial sell-off last year on that flash crash, this gave us a tremendous key range that gave us the upside target. And then ultimately when it came back and dropped through, it dropped all the way back through this key range into the low. So this one was very good. I took it off in hopes that we get a new one. So hopefully we get a new one here. This is one where, again, today I took a bearish position on it for the next 1 to 5 days. The idea was any morning strength, look to sell it for a shot at selling this thing downward and getting this 1741.70 target. Did well with the options this morning on GLD, and then we got a little bit of a late day rally here that kind of gave some of that back, but still holding below the midpoint of the rejection day. This could easily rally through that zone tomorrow, in which case it's probably any close, let's put it this way, any close beyond 1790 is not good and likely breaks that short-term idea. But for right now, if it can stay below that zone on a closing basis, it can go up there tomorrow and reject with a failed new high, go outside day down, and we're marching this way. So the idea is that after this significant rejection, we snap back a little bit, and from there, maybe we continue higher, maybe it goes lower. We'll just have to play it off of that zone. But the fact that we're at the upper end of this major regression channel here could be indicative that we may be due for a rollback of some degree here pretty soon. So keeping an eye on gold moving forward. Let's talk a little bit of Bitcoin. I get a lot of questions from people regarding Bitcoin. Right now, let's just go back to June because we didn't talk about it in July. In June, we were here, and I mentioned that we have enough energy to drop price to between 15 and 18K. So that was the June idea when we did the monthly outlook. It eventually dropped, failed new high right there, and just crushed it and got into the 18K level. I think we got quite a bit lower than that on the cash basis, but the lowest the futures got was 18,630. So we got the 18 zone that we were expecting on that drop. Again, we didn't have a monthly outlook in July, but mostly since then we've had a little bit of a bounce and recovery, and we've rounded off the bottom of this range a bit, but we're still in a relatively narrow range, just like we were here, just like we were here before we've rotated down. Do we go down again? This market actually held quite well, although it hasn't done as good as other crypto names like Ethereum, for example. But it could be building energy for a move to come. 20K, heavily defended level, heavily defended, and like the broader market, was able to form new highs, new lows, higher lows rather, and on multiple waves here for the potential to maybe make a move. I don't know if I'm still fully there just yet, but this is not bad. I mean, if you consider price was at 69K in November and now it's trading 23, that's a huge difference, and there's a lot of folks that were underwater and are now looking to really hold price, maybe add back, right? So this is not a bad spot. Not a bad spot. You know, in terms of market structure, it broke down at 34 here. Beyond that, you go about to 46. And then, so you look at that distance right there, that's about 12 grand. And then you come down here and you say, okay, well, here's 26 from 34. And then you go down from 26 to 18. And now you got these two ranges that we're in. So we're still in a very clear, clean market structure move down. You really got to get back above 26s to open up the space back to 32.7, which is the, you know, this zone right here, 32s. Maybe that can happen, but this is not, you know, again, if you don't have a position in Bitcoin, there's worse entries all the way up to 69K. There could be one more wave down, but kind of like Ethereum, Ethereum was the biggest example of this. We're starting to run out of a little bit of runway, but we could certainly see another wave down after narrow range development. And again, I kind of go back to that 12.5 that could be in play because it's a very thin part of the profile. This is a thin part of the profile, and this was a thin part of the profile, but we've been here for 6 weeks or so, so you've built it out. We still got to fill in here, and we got to fill in here. Do we go up here first and then drop? Do we come down here and then rally? How's it going to play out? But it's not looking super convincing right now. We do have an inside value relationship on the pivot range from the month-to-month perspective, so kind of tells us we got that compression, and maybe there's a little bit of a chance to get moving here soon. But this is Bitcoin here. Not looking its best, not looking so bad. Building some tremendous energy. And if you wanted to build into a position, this is not a bad spot to start building in if you haven't already. If you look at ETH, this one has been much more bullish. It actually rallied 80 8% off the lows. The last time we talked about this one, again, was in June at the monthly outlook. And one thing I mentioned there was that we were likely going to lose half of the current value fairly soon. We're going to go from 1800 and go back to 900. And it did that. The futures got as low as 1,002.5. The cash went to 880 over the weekend. We also had this key range and said, look how great this key range was. Look at that major trap. Look at the continuation. 902.5 was our target. So in June, in the monthly outlook, we said 902.5. That's what's written on the pad, 902.5. Again, it got there over the weekend. The cash got to 880. By the time the futures came on, it's been about 1,000, 990. We got into below 900. 1,000, so 994. So we were in the low 990s. So from 1,000, this thing has rallied basically back to 1,800. So from the 990s back to this 1786, that's about 80% return. That is a tremendous move already. So when you look at ETH versus Bitcoin, you can definitely notice the difference in terms of one versus the other and the strength and the market structure recovery. The difference from FOMC key level to FOMC key level is very stark. So both of them have the June down here, and then Bitcoin prints the July like right above it, whereas ETH is printing it way up here. That's a massive differential compared to what you're seeing in Bitcoin. So this has been a much better recovery from the lows already, and it has already made a market structure move. This LVN right there is the most important right now. We could drop into that zone and still be a buy, but if you fail there, you drop hard to new lows. But if you can hold it, it starts to walk you back up the range. So the fact that this thing was able to break above that 1,300 level and then come back for a hard retest and go, that's pretty solid. Not bad at all. That's going to be the major level to watch. Can this market find a way to pull back, hold, and bounce? Or just hold in general before it continues higher? Or are we still in this phase? I think this phase might be mostly done. That was aggressive. I mean, 3,600 to 1,000. That's very aggressive, and it did it from April to June. So maybe for the most part, this one is getting closer to being done than not, and you have that LVN to hold for a continuation to the upside. So that's ETH futures right there. Quite a bit on futures front, but I mean, again, I got a lot of really great charts, a lot of great action that we've seen here recently. Again, crude oil could be headed quite a bit lower. Gold could be headed back to the impulse midpoint, and a lot of major market structures to watch in RTY, ES, NQ, etc. All right, let's take a look at some stocks now. We have stocks that have formed some great signals here, great patterns. But let's take a look at some of the big stocks first, like Apple. Look at the recovery in Apple here recently. Massive move up, higher highs, higher lows, very, very elongated rally and structure here. Right there, that's the first buy signal we've seen in a long, long while. The last time we saw a buy signal was right there, and we knew that that was likely a trap, right? Again, all of the market structure talk we talked about earlier, we knew this was likely fake. Other than that, it's been sell signal after sell signal after sell signal because it's a trend confirmed signal. At least this particular one is. So when we developed this one early last week, when things got bullish and price was still developing this day, we mentioned that this is one of the first buy signals we're getting. You're seeing this develop in the futures as well. This could lead to another round higher, and this could be a huge turnaround, 1 to 5 days out. And again, 1, 2, 3, 4, 5 days out, and we have seen a tremendous rally. The day after this move, you saw a perfect retest and go. Tremendous movement, squat bar and continuation. This thing has been strong. Prior to this signal, as we were pulling back somewhere in here, we looked at seasonality. And that's what I'm going to share with you right now. The seasonality of Apple here for this period of time is one of the most bullish seasonal periods for Apple of the year. So if you look right here, this is a 5-year look back. If you look at that level right, or that date right here, and then you look at this date right there, this is basically June 29th, June 28th, sorry, July 28th, July 29th, and then you rally into about Labor Day weekend, the first week of September. And look at how steep that period of time is. That 5 weeks tends to be the most bullish. And when we were looking at this pattern, again, we were right a day or so in front of that window. And so far, we've already seen price rally. So when we were looking at it, we were like a day or so before that window, and now we've rallied nicely already to begin that seasonal move. How much higher do we go? Is it this steep? You know, are we gonna how much far? We've already shot much higher already from the June lows. Are we gonna extend to the upside another round? And seasonally speaking, again, this thing tends to do so. Now, one of the reasons why that seasonal pattern tends to hold up, and let's go back out to a normal template here. One of the reasons this seasonal pattern tends to hold up is because of earnings. Earnings is right around that time usually every single year, and there tends to be some strength into that. There tends to be a gap in continuation. But one of the August patterns, when you look at August, the first couple of days of August tend to be down here, and the last couple of days of August tend to be somewhere over here. You know, it closes on highs, it opens near lows. And so we'll see how much more upside we get out of Apple. But if Apple's going to rally in August, like it tends to do, that's going to have a heavy influence on the NQ. The other thing is this 150 market structure level was prior support. Then it went offered, then the retest was offered. We've climbed back above that. So we started to do that mid last month. We discussed that in the room and mentioned if we find acceptance back above 150, you now start to work back to the center of this range, which is about 165, and then you go to the other side of the range, which is about 180. So you have about 15-point increments here that we're working with. And if you look below the 150, you go, you know, to the 135, again a 15-point increment. So Apple moves, at least right now, in 15-point increment, or at least market distributions. And we are currently trying to get above that 165 right now. Now what tends to happen is if you are transitioning and you make your move up, you don't usually go 2 in a row unless it's a very, very bullish period of time. Like back here, for example. It went here, then it went there. Very, very fast. At times, you tend to go up, then you may pull back, you build in here, and then you continue. You know, like this one broke down here, then you went back, then it came down, it came back, then it came down and hit the bottom. You know, there's a little back and forth and go. So this is going to be interesting again. Are we going to trap here and see a hard drop back down before we continue? Or are we just about to beast it to the upside? You know, again, 15-point increments in Apple, and if we do continue higher to the next market structure level up, that August seasonal pattern is going to hold up, and that's going to influence not only the NQ, but also a ton of other tech stocks, as this thing is a leadership stock, and others could rise on this one's strength. So some thoughts there on Apple. Nice 3-day breakout move, by the way, and a great stop run day today. Sometimes after high range days, there tends to be a low range day that follows, but the expectation is for a continuation over time. All right, let's take a look here at Tesla. Tesla's interesting here because this is one that recently could not do anything on its own without asking its daddy, Bitcoin. So ever since it had so much invested in Bitcoin, its price had been tethered to Bitcoin. So when you saw that March move in Bitcoin, you saw that move in Tesla. When you saw that massive trap in Bitcoin at 46K and then it dropped to new lows, you saw the same moves here, the same traps along the way. When Bitcoin got stuck on the lows and got into a very narrow range, so did this one. Didn't matter what Tesla was doing as a company other than what was the price of Bitcoin doing. What we learned here on earnings was that they liquidated their 75% of their Bitcoin holdings this quarter, and now you got the gap up, you got the breakout of this rounded bottom and market structure level, and now you had a quick retest, buy signal, and rally. Again, this buy signal right here was along those same days where we were looking at those signals coming in, and this thing rallied. So very strong move lately, a very good decision to untether your price to Bitcoin, at least for now. I'm pretty sure they're going to go back and maybe buy some more. But 75%, and you can see the difference here. Bitcoin has not moved like this, but it mirrored everything Bitcoin did during this window. And other stocks did too, because there are certain stocks that have quite amount of Bitcoin or own that a lot of Bitcoin, and their price is tethered as well. But it was interesting that Tesla actually mentioned that being the case, and also said it was adversely affecting their price, which is why they made the move. And so a great recovery, good bounce, rounded bottom, market structure recovery off the 775s, 750s. That's really solid. How much more upside do we get? You know, this one's had a wide range this year. Even after bouts of strength, it's had hard drops. Again, is this going to be different? I think there's still a shot here to come rotate back toward this zone here and still maybe fall back into the range. But right now, very strong. Buy signal here. We get another one. We could be stepping this thing up back to 1,050 over the next month to 6 weeks. All right, let's take a look at another big stock here. This is Google. We talked about it on this day and mentioned, man, this has been a long time sideways without making a move either way. Is this a moment in time where we're about to make a hard drop? And we made the case for it happening, noting that we do have earnings coming up. But before earnings, like we mentioned earlier, I said, you know, this close is the lowest close that we've seen after a sell-off. And those are the times where you tend to get those massive gaps the other way. You trap those late bears, and you get a massive squeeze. And man, did that happen. So earnings jumped this thing up. It's been a strong move back to the top of the range, and here we are. This one has traded within really, really well-defined market structure ranges. But as I mentioned before, this one, it's long in the tooth right now, and perhaps we may be looking at some form of transition out of this range sooner than later. 120 is still a big level here. That's the top end of the range. Can it get through that zone and work its way higher? As of right now, obviously, we could see more strength out of Apple, as we mentioned, out of Tesla, and some of these leadership stocks. Perhaps Google starts to make that move. But it's a prove it type of opportunity right now. We're still in a down move overall. We're testing a counter trend edge, and usually at those edges can be about the time where you see another rotation back down. So this is just one to keep an eye on here from a transitional standpoint. If we do start to transition out of this range, you could see a good 1 to 2 months of movement. So keeping an eye on this one here as well. All right, another one here that I wanted to talk about that's a bigger stock here is Netflix. This one has been punished for a long while. On the initial drop and some of the subsequent drops, I considered jumping in on this one, but this is like, you know what? Let it just work its way out because it really wanted to dump. It really did. This is the everything view for the last 5 years, right? Or however many years to date that is. And 250 was that big zone down here. And when price was sitting at 340, it gapped down below the 250. I mean, man, what a wallop that day was. And since then, it made that move to come down here and take out basically every low ever. And since then, we finally formed a little bit of a rounded bottom. You see a little bit of a D-shaped profile here, and we're starting a little bit of a market structure move up. And for the first time in a long time, you're thinking this could be a little positive moving forward for Netflix. Again, here's that rounded bottom at those forever lows, and then you get a market structure move back above the top of this range. You get a higher value relationship for the first time in who knows how long. This is all fairly bullish considering what this thing has been through. And one of the things that brought my eye to this chart was the narrow range that has developed so far to begin the new month of trading. It was once a 3-day range, 4-day range, now a 5-day narrow range. And if you look out over the last 10 days, you can get a 10-day narrow range if you want as well. Super, super narrow. This is the compression before we see the next phase of expansion. Which way will it be? Again, for all the reasons we just discussed on the historical long form chart. I mean, look at here's the weekly, for example. This is the weekly chart. And you go all the way back to those 5-year lows. Right there. That's where the breakout occurred. That's where the new market structure occurred. We're finally seeing a little bit of a bounce. This thing here smashed through every major market structure level. And that's something we knew. We knew, man, if we can't hold this edge, we could drop to this edge. Man, if we don't hold that edge, we could, and this thing has stepped it downward. For the first time in a long while again, maybe there's something positive to be said about current price action and maybe where it's bouncing off of. It still needs to recover quite a bit, but this one, from a short-term perspective, has the potential to do some great work here. Whether this is a long-term zone or not, who knows? You can clearly see its 5-year lows. But there's always more that a stock can fall, as you know. But for the first time on earnings, we didn't see a completely destroying gap there where this thing just gaps through everything. It actually rallied. We got a higher value relationship for the first time. We closed a month higher for the first time. Rounded bottom accumulation. Very, very steep profile there. Kurtosis there. Kurtosis where you have steep drop off from the midpoint of that. That tells you a lot of volume here in a very compacted space, which tends to have explosive tendencies. This could be very good. So when you quantify the 5-day range, let's do that. When you quantify the 5-day range here, right there you can see how narrow it is. It averages about 26 points. And the R125, which would be our target on expansion, would be about 32 points. So between 26 and 32 points of potential movement are coming up ahead over the next 5 days if we get a breakout from the range. Now, if it just sits there, then we just add a day, add a day, add a day, and then these numbers will rise. Which way will it be? Man, oh man, given the strength we've seen on a short-term basis, if there is a breakdown and that breakdown fails and we end up with a huge tail and a failed new low and an up move, this thing will rip to the upside. You would point your cursor to that bottom and say, okay, from 217, let's add 30 points. And this thing could be headed to 247, right? Because we're going to go about 26 to 32 points. So call it 30. So there could be a breakout of about 30 points from this range. What if tomorrow this thing tries to break to the upside, but by the end of the day closes here? Again, you subtract 30 points from that top, and you're going to get a 210 target to the downside, and that could be a very easy short-term move. So this one coiled up tremendously. Got about 26 to 32 points of potential price action that could be seen, range. Once we get a breakout, that could be really good for 1 day, day trading on the breakout day, or it could be really good from a swing perspective 1 to 5 days out. The fact that we have finally rotated off these lows, some rounded bottom and market structure recovery, if it's down and rejects, not only could it go 25 to 30 points higher, but we could start to step this thing up back to maybe VWAP. 270 might be in play in a best case scenario. I hesitate to be too bullish on Netflix, but again, for the first time in a long while, it's starting to show some things that could prove to be bullish here, at least in the short term. Okay, let's take a look at Meta. Meta is one that hasn't really found its footing. But today, it had quite a move higher, finally. We've seen Apple and how it's rallied. We've seen Tesla and how it's rallied. We just looked at Google and how it rallied off the lows. And then I would come to this Meta chart and just be beside myself on why we were spending those 4 days down here, while everything's rallied really sharply over the last 5 days at least, right, from those buy signals we talked about. So it was perplexing that the last 4 days have spent down here. It just couldn't get going. It is clearly on support. Today it finally broke to the upside, retesting the previous month's midpoint. Not bad. This one has struggled unlike anything I've seen ever for this stock. Again, you know, you go back on a weekly chart, you'll notice that this stock was just a darling for so long. It never really had any weakness until it had some scandals that brought it down. Then it rallied to new highs. And a scandal brings it down and it rallies to significant highs. But it hasn't had to endure this. That's been bad. Very, very bad. You have, call it 220 right there, top end of the market structure, and the bottom end is still here at about 120. We haven't made it all the way that far yet. 154 is the low. Maybe there's still more to go for this one. Again, they changed their name. It's Meta. They're changing some of their focus, right, to the metaverse and things of that nature, and man, has that just not gone well from many, many perspectives. At least, you know, the growing pains have been tough thus far. Failed new highs, drop. Very, very bad. So this one has not looked good at all. It's been, every time I look at this chart, I think, man, okay, this might be the time here, and it just can't do it, or this might, and it can't do it. This was tremendous right here. Huge island reversal, failed new low, massive gap up and run, and then trap in new lows. So again, this whole week, And last week it just hasn't got going, and then today it rallies. Is that enough to turn things around? I would say that if this thing can find a way to stay above 175, things start to look good. 175 is about right there. It tried a couple of days and dropped. This prior lows, transition day. If it can get above 175 and stay above it, then you start to open up the upper portion of this range. Right now, still tough. So not my favorite. Not my favorite, but definitely one that we've been looking at here lately, and it just can't get going. Maybe it can get going here pretty soon. All right, let's move on to some other stocks here that have signals, different setups here. And I know I've had you here for a while now, and thank you for your patience. And again, monitoring the chats just in case you have any suggestions. I wanted to start off with CROX, and some of these I could probably do in VT as well. CROX has made a tremendous move over the last week. I really hadn't had it on my radar lately, although it is one that I have loved for a long time. CROX is just a phenomenal stock. It moves tremendously. I mean, this is a $10 low and this is a 180 high. I mean, that's a tremendous amount of range. Great price action movement. It's a great mover in terms of, when it gets going on a swing basis, it's awesome. But this year, it just hadn't really got going to the upside. So it's all been sell side. You want in on this one, sell any of these signals and you're in. Until now, where just over the last 5 days, this thing has printed a buy signal, has seen a massive turnaround in the PIMA trigger zone, has recaptured prices back above the previous year's low on a rounded bottom accumulation pattern, and has gunned it to the upside, back to value for the year already. So this is yearly developing value, already back to it. That's a tremendous move. Now we do have earnings coming up. Earnings right there before the market opens tomorrow morning. So before the market opens, earnings comes out. We'll see what happens. But there is so much distance between the previous year's low and current price since this rally that even if we pulled back a good amount, there could be an opportunity to develop a higher low and stay above that zone and work your way higher now. So this one is impressive from a short-term perspective and also kind of a more medium, longer-term perspective. The sell-off has occurred. It took out the previous year's low, accumulated below that level for 2.5 months, and now you're seeing the recovery back above it. That's a great box reversal. We could see a drop as deep as 60 and still be an opportunity to buy this thing, and 90 could be a good target up above. I guess 85 right there in that LVN, because that's the previous market structure. If it can stay above 60, you got up to 85. You get above 85, you start working your way back to about 110, right? And just little by little here. So this is a really good one that has continued to run after taking out that previous year's low. Earnings coming up, which could change some things here, but again, expecting this one to see strength after weakness. You get some weakness here, look for strength to come in and rotate higher. That's what we've seen on many of these rotations, and now we're seeing a heavy squeeze. So CROX is one to keep on your board here as one to look for on the bullish rotations here. 60 could be seen up to about 85. We take a look at Blink. This is Blink charging. Blink charging here is one that saw a tremendous trap here off the $30 level, off the 200-day moving average. Another one of those ones that rallied and had a big day after bad and dropped to lows. We've had two long-term levels here to watch. We had the $20 level there. We got the $15 level there. Tried to hold 20 for a while, dropped into 15, held. And now look at this thing. Breaking back above 20. Again, a transition. We haven't seen this in a long while. We also have a higher value relationship on the pivot range month over month. And look at this. Price is trading above value year to date. Recently here with a bill introduced, I think we got a lot of strength out of the solar powered stocks, clean energy stocks, and things of that nature. This is one of those stocks, and we've seen strength. The pullback as deep as 20, maybe even a trap below 19, could provide an opportunity to push this thing higher, and you could see your second test here at the 200 of the year. Perhaps it can go to break even on the year and hit 2650. So if it can hold 20 on any pullback, we might see 2650 ahead. You know, again, trading back in this range. That doesn't mean it can't drop back down, and here we go. But right now this thing is flowing higher. This one also has earnings coming up. Got to be very careful with earnings. That's 8/8, August 8th, after the market closes. But right now this thing's flowing higher, back above the 20 level. If it can stay above 20, there could be a good shot for 2650 on a short-term basis over the course of the month. Another one here is DraftKings, DKNG. Earnings coming up on this one, so you have to know when earnings is, as we are in the season at the moment. DraftKings is another one that has wiped out tremendously. Here's a weekly chart. These are your lowest lows ever, because you opened IPO here at the $20 level. It went to 20 to 75, and it went 75 back to 10. And now you're seeing this. Again, earnings coming up. Maybe it craps out on earnings. But one thing, multiple things stand out in this chart. Number one, after all the selling pressure and multiple HVNs, we've seen VPOC finally shift down and come into play at 1334. So VPOC shifted down when price traded between 10 and 15. And now you've seen VPOC go bid to begin the month. Very strong move away from it. Perhaps a transitional phase of prices from 10 to 15 to prices above that. Above that takes you from 15 up to 25. That's your previous market structure range. So if this thing can hold 15s, maybe there's a 25 to go. Again, significant selling pressure. Last year's range was a huge one. This is the S25 for the year on the PivotBoss pivot. So you have the previous year's low right there. That's your S25. Built a nice range and is rallying back off that level. So from that perspective, again, maybe we rally back to that previous year's low, and that also coincides with market structure. So that's the next LVN up. So 25 could be ahead for DraftKings. Now, if you look at it from a daily chart perspective, great rounded bottom accumulation pattern, breaking back above that $15 level. And if you just look at the short term from this 20 up to the recent pivot high here, that's 21 bucks. 15 to 21. That could be a very good short-term play. Now, I'm not getting it as bad as I got it, that spidey sense back in April where we said, man, this last rally could be a trap, and we drop. A lot of the market did that. Earnings can come out and this thing can gap back below 15 and we're trapped and stuck. But if we can hold above 15, there's a great shot to see 20 to 21. It would be the first time you're taking VWAP bid all year because it's been crushed all year long. That'd be very telling. Nice accumulation pattern over multiple months. So this is quite the release of energy. And this 2-day range is the biggest 2-day range we've seen all year to the upside, with maybe one exception. So a huge, huge potential here for DraftKings, where at least in the short term we could be headed back toward 21. And from a longer term perspective, maybe 25 if this transition is real. All right, let's take a look at Coinbase. There's a lot of different names coming back from the grave because we're seeing some semblance of strength here recently. We're seeing some market structure recovery. This is at the zone here. This is 40. This is 80. This is the range. And we've just seen a huge move today. Today was up 20%. Today was up 13 bucks by itself and is now sitting right at the edge. A lot of these stocks were really tethered to Bitcoin. They were tethered to the Fed. They're tethered to people's ability to engage these markets. You're starting to see a little bit of a bounce out of these after getting punishing moves to the downside. This thing dropped from 360 plus to 40 to 40. And when Bitcoin hit its low, the initial low around 25, this one hit a low and it's been sitting there ever since. That's not bad. Maybe the low might be in, but that doesn't mean we could be transitioning just yet from 80 above. That's the big one here. We've seen a huge move within the range. We've seen a massive move over the last 5 to 6 days. Good extreme reversal buy signal right there. Huge day, up 20% today, closing above the previous month's high and 2-month highs, 3-month highs. Are we going to gap down below 75 tomorrow? And this thing crush back down? Or do we finally transition through 80? Can this thing push through 80? Because that is the ceiling right now. So this is one to watch for a potential market structure move higher. Again, if Apple's going to rally, if Tesla's going to rally, if some of these stocks are going to rally pretty good this month, I'm not saying Coinbase has to rally, but it could be a wave that allows smaller boats to move higher. Through 80 opens up a move that could take you to 120. It didn't really trade that zone really well. It only went through it 3 days and it was done. Maybe it needs to retrade 80 to 120. Based on the low of the month and based on average movement for the monthly basis, 123 would be your target this month alone. So it could do it in terms of price, in terms of averages. The other thing is look at value here. Value, how did that happen? Value got shifted to 54.60 after trading right here for the last 6 weeks or so. And now it's taken it bid. Very telling. Again, earnings could crush this, but this is one to keep an eye on for potential expansion above. If it can get through 80, it could be some surprising upsides back to 120. Now, whether it can maintain the 120s once it gets there is a different question. We're talking about the energy just to get us there. So that's one to watch from that perspective. Another one here on the list, these are some signals now. ENTG. Here's a buy signal. This one came out with earnings already, so that's done and passed. This is a good short-term buy signal here. Again, decent rotation higher off the recent lows. Nice pullback over the last couple of days. Failed new low and a bullish finish with a buy signal. Higher value, overlapping higher value relationship here. On the pivot range, it had been lower, 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 so that's bullish. And right now, the first test into the zone seeing initial rejection. So this could be good from a 1 to 5 day perspective back up to 115. 115 is recent highs. You got the 113 CVWAP. Right now, we're trading 104, 105. So from 105 to 115 could be about a plus 10. Tomorrow morning, if price pulls back to about 103, there could be an entry. For 103, takes them off 110. And then allow this thing to go up in 113 to 115, peel off the rest. That's a 1 to 5 day move, as long as price can stay above the 103.20 on a closing daily basis. So as long as it can close above this to finish the day, we're good to go. It could pull back, it can drop a little below it, but you want to finish above it and then work your way. So that is a short-term buy opportunity, ENTG. Another one here is BALL, BALL. This one has a buy signal. Now, this one has earnings coming up, so again, tomorrow morning before the market opens, this thing may see a tremendous move higher. on a gap up. Or maybe this thing gaps down on earnings and all of a sudden, we're opening at 68. That would be very bad. So it depends on how earnings comes out right away, on how this one plays out. But based on some of the characteristics that we've talked about here with some of these other stocks, we're seeing rounded bottoms, we're seeing higher value relationships, we've seen higher highs and higher lows, and right now we're seeing some strength after recent pullbacks with a buy signal. This is a multiple buy signal where you have a wick reversal, but you also have an MGR buy signal where you take a gap up the next morning above the prior day's midpoint on a high range day. That's very bullish. So again, what we're looking for is a little bit of a pullback in the morning, maybe 72. 72 takes you to about 74, takes you maybe to 76 on the high end. That could be a short-term swing move right there. But again, earnings is going to say a lot at the open. Because if this were to have an adverse gap, say this thing gaps below the mid tomorrow on earnings, it could be a sell the open type of drop. So depending on how earnings comes out at the open, this one could be played in a couple of different ways. Another one here is Budweiser. Anheuser-Busch InBev. Midpoint gap reversal as well. That's the buy signal right there. Midpoint gap reversal at support and at the previous month's low. It's a good trap, and it happened after earnings, so that's done and gone. But look at this day here, big bearish day down. That's the midpoint of the day. That's the close. And at the next open, price gaps up open above the previous open. The open is above the previous open. It gapped through the midpoint. That is a tremendous gap up and a tremendous change in sentiment. It trapped late sellers below the previous month's low. And you're seeing quite a bit of strength today. That's a great day trade. But to finish the day bullish suggests you can also see a continuation over the course of the next 1 to 5 days, perhaps even higher. So from a short-term perspective, tomorrow again, morning weakness to be bought for a continuation up. It could be a play from 52.75 to 53 back up to say 54. Maybe this thing can come up here and fill a gap around 56. So not bad, and the fact that it is on significant support is very helpful. So if you draw back support this way, multiple years of staying above that level and bouncing off of it. You got a lower trend line and you're coming into support. Maybe it's bouncing back toward 56 here up ahead on the short-term basis. All right, another one here. This is an interesting one. Triple N. This is a sell signal. So I know on this strength right now, some of you are very curious to see if the strength can last, or will it be a massive trap opportunity. Another opportunity where Lucy pulls the football from Charlie Brown. Will that happen? We've seen it happen many times. If that failure does happen, this could be a great one to work with as a sell candidate. Number one, you have a sell signal here. This is a dual sell signal as well, a triple sell signal, quadruple, many sell signals. They're all stacked on top of each other, so you only see one. But it's a wick reversal sell signal. The red signal here is the signal that's marking a rejection at R3 on the yearly bands. That was a similar signal. These were similar signals. There's also rejections at the previous year's close, the previous month's high, the previous month's close, all of which are triggerable sell signal zones. So multiple things firing. This is also a failed new high. So we had like a narrow 5-day range, price pushed above and failed. So the potential for this one to snap back a little bit is pretty good. As long as it can stay, below 57.5, that's the midpoint, previous close. We could be looking at some pullback. The fact that last month was rather wide suggests that a rejection at the high close would move you back to the midpoint. So 45. 45 could be ahead. I know that's not a whole lot of meat on the bone, but it could be a high probability opportunity off this edge. That's just a short-term 1 to 5 day idea. If you hold it a month, hold it 6 weeks, you may get the full-on reversal from that level that can take you, say, to 41. Each of the last time, 2 times from here, we went to 41. The time before that, it dropped off of this zone 48 and dropped into 42. So if you hold long enough, perhaps there's a rotation that can happen here. But from a short-term perspective, 45's great target on a 1 to 5 day basis there. All right, let's take a look at, this is one we saw in the trading room this morning, or earlier today rather. SoFi Technologies, a massive gap up. This one came out with earnings here where it was right on. It lost 12, expected to lose 12. It gaps up tremendously and runs and is up 28% today. I know it's a cheap stock, but it's more the point of these stocks right now, the ones that have gotten crushed for so long, the ones that have endured tremendous bearish market structure, are finally seeing some rounded characteristics, have seen VPOC shifts down, have seen VPOC go bid. We're seeing some attempts to recover market structure. Perhaps this is the next great trap. But these are bullish tendencies that we haven't seen much of this year, and it could be the beginning of what could trigger additional strength ahead. This one has an inside value relationship, and today took a breakaway gap out of that range, out of the compression over the last few months. Perhaps this could trigger additional strength ahead. That's, again, we haven't seen this lately. It's been all bear side, and every time we've seen strength, it's been an opportunity to sell it. Sell it. You know, you gap up, you sell it. But maybe we're transitioning out of that phase right now, and maybe we see some more upside here ahead. So this is going to be an interesting one to watch on the breakaway gap. There's several of them that look very similar to that as well. I think we saw Herbalife doing something similar. Gapping up 13.5% today. Massive move. Another rounded bottom accumulation pattern and a market structure move up on higher value relationship. Look at this. This market couldn't even create a higher value relationship, let alone move higher, and now we're doing all of those things and transitioning. So perhaps again these could be tremendous trap opportunities. We'll know soon enough. If price closes below those midpoints, things could get very hairy to the downside. But man, if we start stitching together some strength here, we could be returning back to value up above in many of these names. All right, well that's going to do it for the monthly market outlook for August 2022. We've gone about 90 minutes strong here, so thank you for your patience and thank you for your contributions. I appreciate you all joining me here today. Again, you can find me at pivotboss.com or in the trading room. We got the pivotboss.ecofin.com trading room as well. And as always, it's been my pleasure for the monthly market outlook. Everyone have a fantastic rest of your day. Take care, and I'll see you soon.